Ladies and gentlemen, good afternoon. It's my privilege, coming at the end of these other speakers, to try and put some context and explain SM as a group, as a holding company. To do that, in preparation, I tried to ask the question, what do you think about when you think about SM? What do typical Filipinos think about SM, typical retail investors? So I asked a number of people, and here's some of the things that I heard. First of all, SM is, obviously, it stands for Shoe Mart, doesn't it? Shoe Mart, where I go to buy my shoes, where I've always bought my kids' shoes before the term starts. And it's Mr. Henry C's company. Secondly, it seems to have a lot of businesses these days. They have condominiums. I've just heard about a copper mine. They've got malls. They've got banks. I heard about something in China. Seems to be doing lots of things. And it's a leading player in just about everything it gets involved in. In fact, today we've heard about leading bank, largest copper mine in the Philippines, largest property conglomerate. We are the largest conglomerate in the Philippines. And because of that, people also say it's a big company and it must make a lot of money. And then finally, because people shop in our stores, people say happy to serve. Actually, they usually go clap, 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 happy to serve. Now, I'm not going to say these are right or wrong, but I am going to leave this in your mind and we'll come back to it at the end of my presentation. First of all, the obligatory short history of the group. SM started out in 1958 when Mr. Henry C. Sr. opened his first shoe store. He slowly expanded that shoe store over time, adding merchandise to it until it eventually became a department store. In the 1970s, he acquired a small bank. He did so because he recognized that one of his keys to success was that his suppliers could always provide him with goods. And so being able to finance his suppliers became important. That small bank today became BDO. By the mid-1980s, as we heard from SM Prime, he opened the first mall in North Edsa. And at the same time, opened the first supermarket in North Edsa. That was so that that mall could have it all. Mid-90s, SM Prime had become large enough with several malls that it was able to list on the stock exchange. And in 2003, the experience of building malls and getting involved in property allowed the first condominium development of SMDC with Chateau Elysee. By 2005, the parent company was itself able to list on the Philippine Stock Exchange. And in 2006, the Mall of Asia complex, with which I'm sure you're all aware, that opened on Manila Bay. And finally, last year, we had another milestone when all of the property assets, commercial, residential, malls, hotels, conventions, and leisure, were combined into the new SM Prime, which became one of the largest property conglomerates in Southeast Asia. So today, what does the group look like? Well, you can think of all of these businesses in two categories. There are core investments, where the group has deep expertise. And there are portfolio investments, where the group has made investments in companies that it believes are very strong and have a lot of potential to add to the group. But it doesn't try and run those portfolio investments in the same way that it is very hands-on and a leading player in the core investments. So those core investments, there are three of them. First of all, there is retailing. That is a wholly owned subsidiary of the parent company, SMIC. Secondly, there is banking, and the group has two banks, BDO, who you heard from today, and also China Bank. China Bank is in the process of merging with Planters Bank, and at the end of that will be the fifth largest bank in the country. So the group will have the number 1 and number 5 bank. The third core business, which we've also heard from today, is property. Now, I will explain some more about retail in a minute because I think that's the one that hasn't been elaborated upon today. But I will also talk about Belcore and city malls among the portfolio investments. Atlas had a very good presentation earlier. So we have three core businesses that comprises the bulk of what the group does. Last year, in 2013, those three businesses created 27.5 billion pesos in net income. Now, 21% was in retailing, which was a little smaller than usual. There was a lot of natural disasters that happened last year, which affected that business. About 36% is the property business, and 43% was the banking, which was boosted last year by the exceptional gains that those two businesses had. You can look at this and you can say roughly a third, a third, a third. That's been roughly what it is historically, and perhaps will return to in future. But if you look at these three core businesses, you should also realize that they are highly synergistic. Now, what I mean by that is that putting them together creates something that's greater than the parts. 2 plus 2 plus 2 equals more than 6 here. The businesses support each other. The best way I can give you an example of that is to look at the Mall of Asia. This is an architect or artist's rendition of the ultimate plan for Mall of Asia. The bits highlighted in yellow, those are there today on the ground. The bits in green are under construction or being planned. So what you have is the Mall of Asia itself, which is 407,000 square meters, one of the largest malls in the world. And inside that mall, you will find the SM store, our department store, and you will find a hypermarket. You will also find branches of BDO, and you'll find branches of China Bank. Next door is one e-com center and two e-com center, and these are large commercial buildings that are suitable for any office use, and especially suited for BPO use, which is a huge growing sector. We have started construction on 5 e-com center in front of that and have plans for 2 more to develop a large commercial complex. On the other side of the mall is the arena, which we saw pictures of earlier, and where all those first-class international acts and sporting events come to present themselves. The SMX Convention Center is the largest in the country. And in front of that is being constructed a 6-star Conrad Hotel, which will really be something when it's finished. This will be to an extremely high standard. Across the road, in front of all of this, is Sea Residences, next to which is being constructed Shell Residences, and later will come Shore. So what you have in this 60-hectare complex is a mixed-use development that was very carefully master planned when it was reclaimed from the sea, and that master plan has been stuck to, so that you have a world-class mall, retailing, banking, commercial activities, entertainment, hotel, convention center, and residential. It has made it a highly successful complex. In fact, in December, as Christmas approaches, 1 million people will go to Mall of Asia in a single day. There are not many malls in the world, or many complexes in the world, that can make a boast like that. The group would like to do more developments like this. We have a similar complex under development in Cebu, and the seaside city there. Mall of Asia is 60 hectares. We have 30 hectares in Cebu, and we'll open the mall next year. And I'm sure you've all seen press reports or heard stories about a reclamation that we've proposed in Manila Bay. That is an area, an island, in fact, in front of the Mall of Asia complex that would be linked. Mall of Asia complex is 60 hectares. We would like to reclaim 300 hectares. The idea there is to create a modern city environment to the same standard that you would see in areas like Mall of Asia. To do it to the same environmental standards and taking care of all of the stakeholders involved. This is part of the kind of moves that will help regenerate urban areas of Manila by creating a modern city. But this is not something we're going to rush. There is a very clear 5-step process that's laid out by law that we go through in order to get permission to do this. And the group will go through that 5-step process diligently and clearly. Things have to be done transparently, very openly, and taking account of all stakeholders, because this project is very important. It's too important to rush or not to make sure that everything is taken care of. Now let me turn to retailing, because that's the part of the group which has not been expanded upon so far today. You can think about retailing as being 2 components. First of all, the SM store, and secondly, food retailing. The SM store first. Actually, I would encourage you, if you haven't seen it after you've finished here today, to go and have a look at the SM store downstairs in this building. That really exemplifies what SM store is about. It's trying to redefine the customer shopping experience in the Philippines. Modern retailing in a way that you would see in many first world countries that are highly customer focused. Strong merchandising which gives value to the consumers and a broad range of products, so you can get an item at many price points depending on your budget level. Bringing in many foreign brands and supplementing it with our own private labels where appropriate. Modern aspirational store designs, which you can see for yourself later. Very proactive customer service. And of course for us, the SM store is an anchor tenant in our malls. People go to the malls to go to the SM store. Sarah Jessica Parker opened the store downstairs when this Aura mall was opened last year. She flew in from New York and it was a major event. The ladies in the audience may be very interested to hear that and to know that she loves to shop. Turning to our food retailing, we really compete by being very customer focused. We don't compete by trying to just serve very high-end goods, high-end foreign imported goods, and we don't compete by just trying to have the cheapest goods. We compete by trying to provide for everybody with a diverse product range. We think we have one of the broadest product ranges of the best quality merchandise, and that's particularly important when you're talking about fresh goods. We have attractive store designs where you will see wide aisles, good lighting, clear labeling, good displays, and efficient and helpful staff. I'm sure you've all been to an SM supermarket at some point, but some of the things that you'll notice increasingly as we build it out is not just the range of produce, but things like French bakeries, organic food sections, imported produce, wine and liquor sections. And we provide all of this through 4 formats. On the top right-hand side is an example of our typical supermarket that you would find in a mall. This, like the SM store, is an anchor tenant. And then next to it, we have the hypermarkets, which are larger and contain a more varied mix of food and non-food items. These are capable of existing outside of malls in neighborhoods where the demographics demand that kind of service. Underneath it is an example of Save More. This particular Save More is in one of our residential buildings, the Meza residences. Save Mores are about 1/3 of the size of our regular supermarkets, but they carry a very extensive range of products. So they're much more suitable to daily purchases. You don't have to wait to the weekend to do a big shop. And the final format we have is Waltermart, where we joined them in a joint venture last year. And Waltermart has community malls and community supermarkets inside of them. Now, let's just pull back and talk about food retailing in the Philippines in general. Because today we have 193 stores for food retailing in the SM group, and this is where they're located around the country. 80 in the National Capital Region, Metro Manila, 83 in the rest of Luzon, 21 in Visayas, and 9 in Mindanao. This is the population of those areas, and it's interesting to compare. So while we have about 40% of our stores in Manila, Manila only has 12% of the population. The rest of Luzon is 3.5 times larger, but only has the same number of stores. In Visayas, which is about 20% of the population, we have about 10% of our stores. And in Mindanao, we're not even in double digits, when that has close to 1/4 of the population of the Philippines. So I think you can look at this and say, actually, food retailing today is still very underserved. Now, 193 stores, we're the largest retailer in the country. We have 193 food retailing outlets. If you were to add the second largest player, who's also about the same size, you would get to, say, 400 stores. Add the third, fourth, and fifth, and you might get to something like 600 stores. And then even if you add all the convenience stores in the Philippines, you wouldn't get to 2,000 outlets. If you were to go to Mexico, to Thailand, to Indonesia, other countries which you can compare to the Philippines in terms of the kind of demographics, the kind of income levels and consumer needs, you would find stores where one player would have 10,000 upwards. Indonesia, for example. The Philippines is significantly behind other countries in developing its food retail sector. So we think there is tremendous opportunity for growth still. And this is where I'd like to tell you about an investment that we did just about a month ago in a company called City Malls. We took 34% in a joint venture with a company called Double Dragon. And Double Dragon is the brainchild of Edgar Injapsir, who's the founder of Mang Inasal, and Tony Tan Cactiong, who was the founder of Jollibee. These two gentlemen had the idea for building out malls that look like that one in the picture. Now in SM, you know our malls are very large. I mean, we've talked about 3 of the largest malls in the world. What we're talking about here is a strip mall, 1 floor, about a half a hectare to 1 hectare, so 5,000 to 10,000 square meters, compared to 150 for a typical mall for SM Prime, up to over 500,000 square meters for some of our largest. And what this strip mall does is it serves neighborhoods. At that size, it would contain a small supermarket, a food court, and a bunch of retailing like a hardware store, a pharmacy, a bank branch. Now, with the backing of Jollibee and the backing of SM, you can already see that that mall can be populated with a Save More store, with all the branches and outlets of Jollibee, with a bank branch from our own stable, and with some of the other retailers that we have relationships with. We can populate this mall before it's even put up, so we know it's going to be successful. And because it's small, and because it's a standard format, we know we can roll this out to many locations. Now, SM is not going to do this. This is going to be done by Injap himself. This was his brainchild. But we, as an investor, will participate in that growth. We will also have the right to put our Save Mores or our supermarkets in those strip malls. We will have first choice. So remember that map I just showed you a couple of slides ago about the Philippines? Well, even before talking to us, this was the expansion plan of City Malls. The idea is to build 100 by the year 2020, so in the next 5 to 6 years, and look where they're located. They are not in Metro Manila. They're barely in Luzon, in fact. Mostly, they're in Visayas and Mindanao, which is exactly the underpenetrated regions where we think we'd like to grow. So with City Malls, we think we have outstanding partners with outstanding track records. They're the right size of strip mall to go into neighborhoods. They have rapid growth plans outside of Metro Manila, and we have the right to put our supermarkets and, in fact, our bank branches in there. To think about retail overall then, we have 241 stores nationwide today, but we still think we're in the very early stage of market development with the potential for thousands of stores in the future. The organized retail sector in this country is still being created. Rural expansion is the biggest opportunity, and smaller formats have high potential as the way to meet that demand. Now, I'm going to talk about a couple more assets in the group before I start to wrap up. First of all, Jamilo Coast. This is a large area of land that SMIC, the parent company, owns. It's about 1.5 to 2 hours south of Manila. And everything inside that red line on the picture there belongs to SMIC, the parent company. That is 5,900 hectares of prime, untouched, beautiful landscape and seaside. For context, it's about 2 times the size of Macau. It contains 31 kilometers of coastline, 13 coves that include white sand, and it's in pristine condition. This is the land that we have set aside for long-term development of tourism and leisure. And when I say long-term, I mean that because the group does not want to rush what is such a prime location and such an environmentally sensitive area. We've developed to date just one cove that's 40 hectares, Pico de Loro. And Pico de Loro looks like this, the picture on the left-hand side. It is weekend condominiums, it is a country club, it's a beach club. Again, it's only about an hour and a half away from Manila, so it's very accessible. And on the right-hand side is a picture taken from a helicopter. You'll see it nestled in there in one of the coves. That's a picture of just some of the headlands from the slide I just showed you 1 page ago. Now, the real reason I want to show this slide is actually the logo in the top right-hand corner, the panda, because this development is being done with the partnership of the World Wildlife Fund. When we developed Pico de Loro, we took great care to make sure that we were meeting the requirements of protecting this environment. And World Wildlife Fund is our partner today in assessing how we're doing. That white sandy beach that you'll see on the first picture on the left-hand side, today we still have sea turtles that come and lay their eggs there. We're trying to look after the environment. The second asset I'd like to just draw your attention to is a portfolio investment we have in a company called Bell Corporation. Now, Bell Corporation's most significant asset is the City of Dreams Manila, which is one of the 4 casinos next to the Mall of Asia complex on Manila Bay. That's a picture of something like what it'll look like when it opens. We recognize that we don't know how to do gaming. That is why it's a portfolio investment, and we have a world-class partner who will operate it for us, and that's Melco Crown. So Melco Crown run the City of Dreams in Macau, and they will run the City of Dreams in Manila. In fact, they will be able to co-market between the two, and they'll be able to leverage their customer database that they have and bring in the foreign players into our casino. Over 1.3 billion has been spent to develop this between us and Melco, and it should open sometime in third quarter of this year. When it does, you will see a fully integrated complex. It will have something like 1,700 gaming tables, 1,700 gaming machines. It has 6 towers of hotels, which will be 3 different brands. It will have restaurants, it will have entertainment, it will have retail shopping. It'll be fully integrated experience for people who want to come to the Philippines. As an investor, as a controller of Bell Corporation, SMIC no longer has a financial exposure to make this up and running. We've spent our investment. At this point, we just watch and hope it's successful, and we wait for the dividends. Now, I've tried quite hard so far to avoid showing you any numbers, but this next slide is all the numbers I want to show you in one go. What are these numbers? Okay, so the big red one in the middle, 253 billion pesos. That is the revenues of SM Investments Corporation, the holding company, last year, from all of the companies underneath. The blue number underneath, 13%, that's how much those revenues grew year on year from 2012. And typically you would see SM, if you look back over the last, say, 8 years, you would see that number in the 12 to 15% range. 11% underneath that, that is the net margin of the group. That means that for every $100 of that 253 billion pesos of revenue, for every 100, 11, it remains after paying all of our costs and all of our taxes and so forth. 11 is available to the shareholders, either to be paid out as dividends or to be retained and reinvested in the business. Where does that profitability and that scale come from? Top right-hand corner, it comes from 241 retail stores. Top left, it comes from over 1,100 bank branches between BDO and China Bank. The green number on the right, those banks have between them over 2,700 ATMs to service their customers. And on the left-hand side, also in green, we have 48 malls in the Philippines and 5 in China. Now, 220,000 people is the employees directly employed by the group. That's just the people directly employed under the SM umbrella. You could add to that all the people who are indirectly employed through construction, of our malls, of our residential, of our commercial buildings, all the people who are employed in all the stores, all the retail formats in all of our malls are also connected to the growth of SM. What I'm trying to say is this company is a very large employer and tries to create jobs for Filipinos. 65 billion is the amount that the company invested in capital expenditure last year. This is how much is plowed back into the company in order to carry on growing. And on the right-hand side, 13.5 is the return on equity to the shareholders of the company. So for every $100 of capital that the group holds in equity, we return 13.5 in terms of profitability. Mr. Littman made a very good point earlier about the importance of return on capital exceeding the cost of capital. At 13.5%, I think we're comfortable that we're doing that. That is why the number at the top, $12.5 billion, is the result of all of this activity and is the market capitalization, the market value of SM Investments today. It's also the reason why, at the very bottom, 1/3 of SM Investments is held by foreign institutions. So foreign pension funds, foreign wealth managers, the state funds of companies, of countries, all around the world own a stake in SM Investments because they like the story and they see the growth. The group is not just about numbers. We have a charitable foundation, SM Foundation, and SM Foundation has 4 advocacies into which we pour our resources. The first of these is education. Actually, Mr. Henry C. and his family invest privately quite heavily in education with universities and their own donations. But just inside the company, we fund scholars with over 3,000 to date. We have 1,700 graduates and have built 144 classrooms around the country where communities need classrooms. The second advocacy is in health. SM Foundation has run over 900 medical missions and has helped over 700,000 people, as well as building over 80 wellness centers. We train farmers under our livelihood program so that they can improve their yields and use modern farming techniques. These are 12-week courses. They're quite rigorous. We put them through a real education process. And if things work, at the end, they can become suppliers of our supermarkets. Our fourth advocacy is called Operation Tulong. This is where we help people who are affected by many of the natural disasters that we experience in the Philippines. And today, this has helped almost 150,000 families. I think it was mentioned earlier by SM Prime, but we've just announced that we're going to be building homes for the victims of last year's typhoons for 1,000 families and donating them. As well as our foundation activities, governance is a priority for the group. By governance, I mean, how are we running the group? Governance is the fairness, it's the transparency, it's the taking into account of the rights of the small shareholders and the minority investors, and making sure the business is run on a sound basis, fairly and ethically. High governance is why people outside the country invest in SM or in Filipino companies. So we do things like this. We have independent directors on all of our listed companies, and they are independent directors who are outside of the group, outside of the family. They are American, Singaporean, and they look at it from the viewpoint of people who hold small interests, minority interests. They represent them on the board. We have an independence governance team in the group who reports to that board of directors. In investor relations, we don't just treat our communications with investors as us telling them the story of the group. We also listen and bring their concerns back to the board. We have a high level of disclosure and transparency, including sustainability reporting. And we also have a code of ethics that governs how people are allowed to engage with suppliers, customers, and other stakeholders. And it's because of these practices that we win many citations from bodies such as these. In fact, Corporate Governance Asia has given us the award for 6 years in a row now. 2 more slides and then I will stop. I'll come back to this one first. This is what the group looks like today. The reason I'm coming back is, first of all, to emphasize that we have 3 core investments in retailing, banking, and property. And also, just to say that these are being positioned for where the Philippines is going. You know, we may be a leading player today, but the Philippines is a fast-growing market and it's still developing. It has so much more potential in all of the areas, especially in the core businesses that we're in. So within the last couple of years, BDO raised $1 billion, making it a tremendously strong bank that it can do whatever it needs to do to carry on strengthening its leading position. In retailing, well, I spoke earlier about how much potential there is, and you can see that with moves like the investment in city malls, we're going to try and capture it and retain our lead. And in property, the merger that was undertaken last year was to position all the property entities of the group to really become a leading player as the property industry continues to evolve and grow. So back to my opening slide. Okay, first of all, Shoemart, that's Mr. Henry C.'s company. We did start as Shoemart, and Mr. Henry C. does control the company. But I would like you to think of it this way. SM is a proxy for the Philippines. We are in some of the growing sectors of the Philippines, and many foreign institutions look at us as a way of investing in the Philippine story, because we are a world-class company. A lot of businesses, yes, but we are focused on 3 core businesses, and as you can see with the Mall of Asia complex, there are very strong synergies between them. Leading player? Well, yes, we are number 1 in many of the businesses that we're in today. But there is competition. People can grow, people can catch up or overtake, and we're still at an early and developing stage in many of the places where we play. We like to think of ourselves as a competitive player in a growing and still developing market with a lot of potential to go. Big and lots of money, we are a successful business. However, as I hope you understood from my earlier slides, that's only part of the story. It's business, plus an emphasis and a priority on governance, and the ability to use the success of the group to really push advocacies that we think are important. And finally, happy to serve. And I'm happy to say yes, the SM Group is happy to serve. Because all of this comes from the fact that we are customer-focused. And we are customer-focused for millions of people, for as many people in the Philippines as we can. Ladies and gentlemen, I'll stop there. Thank you very much.